So anyway, good afternoon. It is Sunday, and it is the beginning of a new month. This is May 1st, and we just want to look at what might be happening in the market not only this coming week or this coming Monday, but the coming week and the coming month. And just to get started, we sort of talked about a bit last week the idea of a trading journal. So this is a journal that I've created. It is currently available on my OneDrive in my Gurula tab, so I can share it if you'd like to sort of make it your own. But these are the trades I took last week, and I show the date that they're open, the expiration, what it was, and the strategy, and of course the opening stock price, closing stock price, strike, etc. And then what I do is I calculate based on these transactions the gains and losses. And let me see if I can figure out why my chart is not showing fully. So this should, okay, here we go. All right, so this was day one and started off with, $500 in the account, 45 cents. And of course, we had a loss on day one that was based on the fact that I had an open position at the close of market for NEO. So that showed as a loss primarily because I was only showing the cost of purchase and not any gains that were made, which will show up on the next day. But it would have been a loss because essentially I paid 22 cents, I think, for those contracts. And while if I closed it out that day, it would have still shown a loss. It may not have been as great simply because I would have recovered some of the funds. But on the first day of trading, we're showing a loss of 10%. And the reason for that is I did not think about this previously, and I should have, but there's a cost associated with the transaction. So the fees, which I'm going to seek to negotiate with TD Ameritrade, is 65 cents per transaction or per contract. So for every contract that is purchased, it's 65 cents. So here we have a total of 130. And I just want to show you how much that impacts your gains and loss. So here, those fees totaled $7.15. So that's pretty significant when you think about it. And I mean, quite frankly, we have to factor that into our cost, right? So if our aim is to make 10% gain on our account each day as our target, that needs to include also the cost of the transaction. And I have a cumulative total here. So on the first day, we're down 10.4% after the fees. And then on the following day, we had a gain of 18% or 18.5% for that particular day. The cumulative return was 8%. So we are lagging. And of course, we should be at 20% here because ideally, after 7.5 days, you'll be at 100% gain. And that's our aim. But we're not there. We're going to try and make that up this week, but we're not going to make any bad decisions if we can avoid it. So I'm just going to close this for now, and we're going to talk about what might be happening in this market. And what I do is I start off by looking at my watch list from a monthly perspective, and you'll see Netflix on my chart. I'm just going to push this over here to the buy list. So what I've done, I've gone through a series of stocks, and those that I thought warranted a closer look, I've moved to what's called the buy list. and I'll show you what this looks like on a monthly basis on the buy list. So these are the ones that I've taken, I'm going to take a closer look at from a monthly perspective. And that doesn't mean that they're going to end up in my watch list, but certainly they deserve a closer look. So this is Exelon. And the reason why I chose Exelon, if you're looking at my chart, you'll see this is clearly a shooting star. Now, a shooting star, which is a candlestick pattern, simply means at the top of a move, you have an inverted hammer. That will normally signal a reversal. And again, just to be clear, past performance does not guarantee future results. So there is a percentage of time that this happens. And I like to use something called the Encyclopedia of Candlestick Charts. And I will share what that book looks like at some point today. And I'm going to tell you what it says about the shooting star candle. And this is really interesting. So shooting star, one candle, and I'm going to my source here, and I'm just going to read for you what it says. And it's on page 660. And theoretical, it is a bearish reversal. And it says actual bear market, a bearish reversal occurs 60% of the time. So that's really interesting. So 60% of the time, when you see this candle, it indicates a reversal in a bearish market. If it's a bull market, then a bearish reversal occurs 59% of the time. So even though there is no guarantee that this is going to happen, based on the odds, based on statistics, based on everything that has been examined and the number of times this has occurred in a particular chart pattern, 60% of the time it indicates reversal. So obviously what we would do here is we would mark this chart. So in the event that the market for the next couple of days or weeks is going to be moving down, this is a stock that we would buy to the downside and would feel comfortable buying to the downside, because again, this is a monthly candle. It's at the top of a move. I'm going to see exactly what this looks like from a historical perspective. So if we look at this, so looks like the all-time high was $65.71, and that occurred back in July of 08. So we haven't marked any resistance here, but we would do that. So looking at this chart, the only thing that we can use are these candles. So we want to be above this price point of 40.78. So we can see that on our screen, 40.78. We want to see, can we mark here on our screen two candle wicks that are correlated just above this price or near it? And looking here, what we have are this candle and this candle. So I'm going to mark this and correlate these two. And I'm going to call this algorithmic support and resistance, because based on this method, I believe that this is where machines typically either buy or sell based on past behavior of the stock. Now we are above. We're going to look and see if there's anything else we can correlate here, and so far it looks like there might be two candles here. So this one and this one, which is below the 46.78. So let's see if we can't mark these as well. All right, so we've marked these two. So now we have support here below and resistance above. So if we go back to this, we're pretty close to where we were before. So we're going to take this one out. We don't need both of these. All right, so now we have this on our chart. We can use this to determine support and resistance on a faster time frame. So looking at this particular stock and nothing else, and we'll go through some others. And I'll just scroll quickly through these and then we'll come back and go through this. I'm going to show this for 5 years, actually for 10 years. And we'll look at LAC. This is on my list. I'm considering LAC to basically bounce off of this support level because we've seen it happen here. But remember, when a stock hits a support level multiple times, it generally weakens. So it may bounce into next week, but then we're going to look around here at 29.33, which is where this level of resistance is. And we would consider whether or not to take this to the downside, depending upon what the market's doing. Macy's gives us a pattern of continuation. So we've got this inverted, the shooting star, which again, we saw here, right? I mean, this is the candle we're looking at. This one's red. Just so happens the one with Macy's is green. It's at the top of a move. Now, given the fact that this candle opened above here, indicates that yes, it did open above maybe for the day, for the week, but ultimately it started to move down. So now we have this downward move on Macy's, and we see a doji for the month of February. We see a spinning top for the month of March, and now we see another spinning top for the month of April. And this 5-day EMA has become significant resistance for Macy's, and we see Macy's moving to the downside. Ultimately, looking at the 5-day EMA crossing below the 50, which would then accelerate this move to the downside for Macy's. And we believe that based on what we've heard about the retail sector being somewhat weak, that this is going to be a trade that we would look to take to the downside. So what we are trying to decide is if we're going to be trading any of these stocks, which direction would we want to trade them? So this is our preliminary assessment using the monthly chart. And then let's just take Macy's and Exelon and go to a weekly and get an idea about what's happening on a weekly basis. So both of these are ones we would look to trade down. So looking at a weekly chart on Exelon, it's interesting here that we see another shooting star. So shooting star indicates, again, reversal, and it looks like it's had a really strong move to the upside. So now it's starting its downward move, and it has quite a bit of room to go. So unlike most of the stocks that we have seen, many have been beaten down already. Exelon is at the height of its move. So it hit a 52-week high here, 50.71. This is a 3-year chart. So we're looking at 3 years. So if we looked at a 52-week chart, obviously this is going to be a 52-week high. So when we're buying to the downside, we really want to find things that are within 30% of their 52-week high. So this one qualifies because that's when you get the strongest moves. Things that have been beaten down and things that are within their 30% of their 52-week low, they can still move down, but the pressure is typically going to be buyers coming in buying the dip. Here, that is less likely. So again, looks like we have some confirmation that this is going to be a nice trade to the downside, and we're looking for support, and we find it here, here, and here. Let's look at Macy's. So Macy's is somewhat in a congestion area. Not sure if I would trade Macy's. And the reason why is because it doesn't appear that it has broken out of this congestion. So there's going to be a lot of volatility, and we could just kind of get whipsawed with this trade. Now, it looks good on the monthly, but when we look at a monthly chart, I mean, what we see is we see this indecisiveness, so to speak, because that's what this is. This is, again, spinning top, doji, spinning top, doji. This could be a doji or a spinning top. It's really indecision, yet we know that it's moving down, but there's still some pressure both from those who are buying to the upside and those who are selling. And we see it here too. And it's just like a slow grind. And then it finally breaks here, a little bit of indecision, and it breaks here. And then now it starts to reverse. So not sure if Macy's would make our list for this week. But again, just go back to the weekly. But I really do like Exelon. And it may very well be that this is only good for a week or only good for a day, or it could actually be the nice beginning of a long downtrend. So if I was a swing trader, this is one that I would look to trade to the downside. And remember, I've said previously, when you have two or more indicators at resistance or support, then that indicates very strong support or resistance. So here we've got an ATR trailing stop on the weekly, and we have this algorithmic support level at 42.10. So that tells me that there's going to be considerable support here at 42.10 for this particular stock. Now, if this 20-day EMA moves up and it somehow touches this algorithmic support level at 45.42 before, again, the price hits that, then there'll be considerable support at this level. Don't think that's going to happen. I'm fully expecting this to continue to the downside. Let's look at a daily, same chart. We started off with the monthly. All right, so now on the daily chart, what we want to see is we want to see this particular stock on Monday fall below this ATR trailing stop. So let's mark that. I'm just going to put a little line here, and we're going to call it ATR trailing stop. Daily. Choose the right color so we know what it is. So now we'll be able to see this on our other time frames. And once we see that this EXC, Exelon, has fallen through this ATR trailing stop support, then we would enter to the downside, in particular if the market overall is moving down. I like the fact that the 5-day is crossing the 20, and I would actually stay in this trade. I would continue to trade it down, particularly if the 5-day crosses the 50 to the downside, because then that should accelerate the move down. And I don't really see any support, even though we have support here and here. I don't really see any buyers for this stock until we get, looks like around here. And you can see where where there's this consolidation here, where the price started to move up, and sellers came in and tried to sell it off, and it didn't. I mean, the buyers came in and continued to prop it up, and then it just took off to the upside. So there's another mini consolidation here, but we've fallen through that. So this effectively now becomes a supply zone. In other words, this is where we would anticipate the stock gets sold off, because we had this consolidation, this mini consolidation here, and I can move this up a little bit before it starts to make a move to the upside. Moves up, mini consolidation, moves up, and you see it comes down here, and then the buyers come back in and they, of course, drive the price up. It falls, it pauses here a little bit and tries to hold. The sellers overcome the buyers, and it falls through this demand zone. Now, here it's the supply zone when it's moving up. When it falls to the downside, now this is a demand zone. So you're expecting buyers to step in. They got overwhelmed. So now when the stock falls through, this becomes a supply zone. It'll simply get sold off every time it gets back to this level, at least the first time it comes back to this level. In the meantime, we're expecting it to fall, and we're expecting it to fall to this demand zone here. This would be a key area where we would watch for buyers, people who bought the stock down here, and we can actually take this all the way across to here, but where these buyers are, and we want to be out of it here, and just kind of keep an eye and see if in fact it's going to start moving back to the upside. So let's look at this over the course of the last year, and this gives you kind of a better picture of what's happening. And the low was, this was a $30 stock, so it hasn't moved a whole lot. However, it is within 30% of its 52-week high. And looking at the option premiums, this is a monthly versus a weekly. So I'm not so sure if I would be trading it necessarily, but it's one to consider. Because it's a monthly, it's going to be a little more pricey, but it looks like a $45 call is currently around 75 cents on the ask. So that's how we go about making some decisions on what's going to be in our watch list. So let's just go back and look at some of the others. Going back to a 10-year chart, and Morgan Stanley. Morgan Stanley is a candidate for us to the downside. If you look at Morgan Stanley, it consolidated here. This is a monthly chart. So beginning in August of last year, it started to consolidate, and of course hit a high of 52-week high of 109.73, but now it's starting to decline. So it's already fallen through support here. And the next level of support we see, we've got two levels here. We've got the ATR trailing stop at 68.18 and the 50-day EMA at 67. So by the time the stock falls, these two should be aligned and should provide some strong support. But $68 is a long way from 80. So we would expect that Morgan Stanley is going to fall to about $68 and change. And let's see if we can identify any interim support. So looking here, and I'm going to go out and find the maximum. So we're going to go all the way back here and see if we can correlate a couple of candles. First, we'll start on this side, and we want something below the current closing. And we don't see anything here, but if we zoom out, and let's look at this price, 80.59 is the current price. So we want something below that. All right, so I see a couple of, that's a little far down. Let me see if I can find anything closer. And I'm looking left. I'm starting here and looking left, trying to see if I can find something that correlates with one of these wicks here. And so far, don't really have anything that's close enough. This is somewhat close. It's 80-29, but it doesn't seem to be the right fit. And still can't find anything at this level. Well, actually, looks like we have these two here. So this, the bottom of this candle and the top of this one, we can correlate those two. And we're going to just look at that, but we're going to see if there's anything else below that while we're looking. Find something that might be 3 candles or more than 2. And it doesn't look like we're going to find anything. If we take these, we have this candle, this one, this one, this one, this one. All right, so now let's kind of take a look and see what we've got from a monthly perspective. So it's interesting that this area here is really near where the 8-year trailing stop and the 50-day EMA is. So we've got this gap here, which may not have been noticed if you're only looking at the daily chart. So I'm going to mark this gap. So this is a high of 73.64. $73.64 gap to fill on Morgan Stanley. And it's between here and here. So it filled it on the way up. So we can say that this gap was actually filled, but this is a liquidity gap. So we want to see if we can take advantage of it. Not sure if it will work normally. You want to see the stock come back if it was continuing up and fill the gap or move up. So it filled it on the upside. So not really sure how this is going to play here, but we'll just mark it just because and see if it works for us. So now looking at a weekly chart for Morgan Stanley. So Morgan Stanley, here is a spinning top. And here we've got a spinning top, but we've got Morgan Stanley bouncing off of or getting rejected off the 5-day EMA. Remember I said earlier in the week or last week that the 5-day EMA is, in my estimation, really strong support and resistance. So this is a weekly. It's getting rejected off the weekly. The 200-day EMA is all the way down here at 69.07. That just happens to be where our algorithmic support line is that we drew on the monthly candles, which also correlates with this former previous trailing stop. So there's a lot of support down here, and we're considering this to be a magnet for Morgan Stanley for the price to fall to this area before it finds any real support. So this is one we would also trade or consider trading to the downside. And if we look at a daily chart, let me go to a 1-year chart. So Morgan Stanley has made a new 52-week low. And it's interesting, when you look at it on the monthly chart, it seems like it's moving to the upside. You look at it here, it's a new 52-week low, it gives you a different impression. So that's why it's always good to take a look and see what is happening from a historical perspective. And you want to start with a monthly chart, then move to the weekly and move to the daily. Because if you're just looking at a daily chart, it may very well look like Morgan Stanley is good value right here because, it's a 52-week low, and we're expecting that we want to buy to the upside if things are reversing and they're within 30% of that 52-week low. And this may be true for Morgan Stanley, but we would do that when it's down in this area versus up here somewhere, because we don't anticipate it's going to stop at its current 52-week low. We're expecting it to continue to decline. That's just based on the technicals. And I mean, just look at the difference in these charts. This looks like it's really high, but when you go to the 1-year chart on the daily, it looks like it's been falling for a while. So it's always important, again, to start with the monthly chart. Any questions so far about what we've talked about?
Richard, when you said within, that is within 30% of the 52-week high, right? Within.
Well, it is for Exelon, yes.
Okay, I just wanted to make sure. Okay, thank you.
Yeah, for Morgan Stanley has actually just made a new 52-week low on Friday. So while, again, I would like to trade things to the upside that are within their 52-week low, because they typically, when they reverse from a downward move to the upside, they tend to break out and have a stronger move. But I'm going to select things that are truly have been in a downtrend. And if we look at Morgan Stanley, I mean, this is more of a sideways movement. You wouldn't think that by looking at the chart, but this is more of a sideways movement. So if we go to a weekly chart, for example, it just broke out of a consolidation here to the downside. So it's just starting its move down. So now we get a better picture on a weekly over the past 3 years about what's happening with the stock. And if you look at Exelon, again, Exelon is clearly, at the top of a trend over the past 3 years. Morgan Stanley is also at the top of a trend, and it's in a decline. So we would be catching Exelon at the beginning, the start of its move down, and Morgan Stanley is already in the process of moving down. But if you look at it on a daily chart, each of these, you get a different picture. So Exelon still shows we're catching it at the top on a downward move. Morgan Stanley, you don't really see that on a 1-year chart. I mean, what you see is sort of, looks like it's making a new 52-week low, yes, but this is really, it's been consolidating over the past year. And the best view of that is on the monthly chart, where you've had this consolidation that started again back in August, and it's just not starting to break down. Ideally, it would have been nice to get in when it first fell below the 5-day EMA and this support level here and trade it down, but it's not too late, because this looks like this move is just starting to the downside, and it should accelerate as people start to get out of this stock. So I like Microsoft also. And the thing about Microsoft, I can't really tell what it's going to do yet. So looking at a 10-year chart, Microsoft appears to be right now. So we have this doji. We have this doji. So these clearly signal a reversal at the top of a move. And now we've got this downward move, and really this is a consolidation. So Microsoft is sitting on the 20-day EMA on the monthly chart, and it's also sitting on this algorithmic support that I've drawn based on this candle and this candle. So we've got really strong support right here on Microsoft. And even though it's starting a move to the downside, it very well could be that this is simply a pause in an upside move, and Microsoft finds some support here and starts to move back to the upside. So we don't have a really clear picture, and in order to be able to figure this out, we'd want to see Microsoft, how it's going to perform this month. And we have the benefit of being in a brand new month. So when this candle forms on Monday, it's going to give us some sense of direction. Now, we may not know for a couple of days, but we'll know whether or not Microsoft is going to, again, bounce off of this support level or fall through it. And if Microsoft falls through it, then we'll be looking to take Microsoft to the downside. And we're looking at probably 243.06 as a price level to see if that would hold, and we would mark that on our chart. And if it doesn't, we're looking at 228. And if that doesn't hold, then we're looking at 207. So let's go to a weekly for Microsoft. Over the past 3 years, this is where we are. Is that lifetime? So it's max. So the past 3 years, this is what we see on Microsoft. Now, what's interesting about this chart, let me just zoom out for a minute. So we've had this move. This could be a head and shoulders pattern. So you've got the shoulder here, you've got the head here, and you have the right shoulder, which is formed. So a head and shoulders pattern would typically signal that it's bearish. We saw what looked like was a bearish move on Microsoft on the monthly chart. And we see a couple of things here on the weekly. We see an inverted hammer. It's at the bottom of this move here. And we see another one like that forming. But we also see that the 5-day EMA is resistance. So it would be different if this was sitting on top of the 5-day EMA. It is sitting on top of this algorithmic support level. So there could be buyers. Again, it could be that the machines decide that this is the price to buy Microsoft. And if that happens, then what we'll see is Microsoft will move up and it'll get above the 5-day EMA. But right now, we don't really know what's going to happen. But if it falls through 271.79, then we know that these same machines will likely kick in and start to sell Microsoft. So I like Microsoft to the downside right now because the 5-day is, again, crossing the 50 to the downside. That's a bearish signal for me. And what I'm showing here from my chart from last week is that very thing, is that Microsoft, again, right here, the 5-day crossed the 50 to the downside. And we have this inverted hammer, but that doesn't necessarily mean that it's not going to continue a move to the downside. So remember, 60% of the time it does, but then 40% of the time it doesn't. So depending upon what's happening with support and with resistance, and if it falls through this support level, then we would expect that Microsoft would continue to the downside. Looking at it on a daily basis, and let's look at a 1-year chart. Very volatile. And again, you see the head and shoulders pattern. So this is going to be key right here. I would consider this as the neckline, and we could move it up here if we wanted to be, if we wanted to. So we could say this is the neckline, and it's the right tool. We could say this is the neckline for this head and shoulders pattern. And I'm going to mark this as a color I don't currently have in use. And then we would expect if Microsoft, again, below this area here is going to be bearish. So if it falls through this support at 271.79, now we'll be looking to trade Microsoft to the downside. All right, and one of my other favorites is Net. I've been looking to trade this, and I've been watching Net for a while. Net is sitting right on top of this ATR trailing stop on the monthly. And I've watched Net in this consolidation pattern for the past several months. I mean, this is just really a consolidation. And when you think about it, I mean, we just have this sideways movement here. And there is also a consolidation here as well. So this could be a demand zone. I'm going to start from here. So this could be a demand zone if it falls through here. But if it falls through this support level, it's quite likely that it's going to continue a decline. And looking at it from a weekly basis, what we see is a shooting star here, this inverted hammer, which is a shooting star. And then we've got this move to the downside. And we have it falling through algorithmic support with the 200-day EMA at 70.17. So it would not be unusual if it fell to 70.17, because if we look at this consolidation here, and I'm just going to draw this starting from here. This is where the buyer stepped in and the price took off. So we've got this consolidation here, this demand zone where buyers would come in. And it seems to be right in line with what we've identified here as the 200-day EMA, where the support level would be. So Cloudflare to the downside to about 70.17. Now what's interesting, I looked at SPY, and I've basically determined that a key level for SPY is going to be about 400. That may have changed. So let me just kind of take a look here. We're going to go with 5 years versus max. I've got a lot of stuff on my chart, so let me just get rid of some of these drawings. You can always put them back and move some of this stuff out of the way. All right, so with SPY, get rid of our channel. So with SPY, what we have is clearly a bearish signal, I think, given that this is almost bearish engulfing, not exactly, but pretty doggone close. So you've had SPY, it moved up and it declined, and then it had this consolidation here where buyers stepped in at the 20-day EMA and started to buy it and drive it up, but it's having trouble with the 5-day EMA, which is the stronger, I think, of the indicators because it's the closest to what's actually happening. So now you have SPY sitting right on top of the 20-day EMA. You've got the 5-day EMA coming down on top. It's below this algorithmic resistance at 420.64. So my take is to trade SPY to the downside. And I originally had said 400, but that was earlier after looking at the chart. And now looking at the 8-year trailing stopper on the monthly, I would target 378 or lower, to be quite honest. 378. We've got this red candle here, looks like a consolidation. Let's take a look on a weekly chart. And if we're looking at a weekly, so now I would look at the 200-day moving average, this algorithmic support level, and I'm going to say 364 is my target for SPY, because you've got this 200-day EMA coming up, and it's going to align with this algorithmic support level. Could maybe be above it, but this is going to provide some support for the SPY, and I don't see any other support. Let's mark that ATR trailing stop, and let's see, that's at 378.35. So we're going to mark that just to kind of see where it is. I should always remember to change my drawing tool. So 378.35, and we will trade SPY on Monday. ATR trailing stop monthly. Going to trade SPY on Monday because it is a Monday expiration. And again, I think we'll get the biggest bang for our buck with a Monday expiration versus something else, given the fact that we have a small account. We don't have a lot of money to use. So, all right, here's the 8-year trailing stop on the monthly, which is where we would look for the first level of support for SPY. And if it falls through that, then on the monthly, we're looking down here. But let's see on the weekly what it looks like. All right, so this looks like a good target because the SPY moves $18.41 a week. So the current price is 412 minus 1841. All right, so we're expecting SPY at the end of the week to be near 393.59. So that's that $400 target I mentioned, which seems like a good number. And what I like about this is the 5-day EMA is crossing the 50 to the downside. That usually is an acceleration. So the market could sell off quite easily on this during this coming week, and SPY could fall to 393. And then if we add another or subtract another 1841, that gives us 375. That puts SPY here in 2 weeks. So that's not an unreasonable trade. So looking at SPY over the next 2 weeks, we are expecting SPY to hit this target of 378, and there's a lot of support down here. So it looks like the 200-day could move up to here. Not sure if this will hold, but we would look at maybe a 375 put on SPY if we were buying this 2 weeks out. That would be our target. So just to kind of take a look and see here. So if we're looking at 2 weeks, so May 2nd, that would be May 4th. So 375 is not on the board. Let's make this all. Just want to get some idea about price. So it wouldn't be May 4th, it would be May the, well, it's 2 weeks from now. It'd be May the 13th. So here we go, May 13th. I can close these. And a $375 put is $1.90. So actually that's not a bad price. And a $400 put is $5.42. So if we were very confident in our position, you could buy a $375 put on the SPY for $1.90 for May 13th. So I'm going to mark that. Now that's obviously way outside the money, but we're trading with a small account. And it may very well be that we buy that and then sell it as a day trade. Or if in fact, for some reason, we have to, we could then swing it. All right, so I'm not sure if we're going to trade SPY, but well, trade that particular put, but we are definitely going to trade SPY on Monday. And it looks like it's heading towards this mark of 378. So maybe we look at a 380 call, which might be a little more expensive. But ultimately what we want is when 2 weeks pass, we want that SPY call to be deep in the money. All right, so any questions about what we've looked at? And looking at the VIX, just to kind of get an idea about what we expect. The VIX looks really interesting, but I'm going to pause here before going into this. Any questions, Princess, about what we've talked about so far? Do you trade SPY?
I did get into it Friday, but I got out way too early, trying to do too many things at one time.
Well, no, I understand. And that, it happened to me. I had a funeral on Friday and some other things. So I only took 3 trades. I couldn't, because I couldn't watch. And again, I'm going to just say, if you cannot watch your trades or watch your account or watch your charts, then it's best not to enter unless you're swinging. And then you can use, a stop loss. But just know that market makers may trail your stop loss and hit it and stop you out. And then the stock may move in the direction that you had planned all along. So for that reason, I try and have my stops in my head. And also, if you are going to be in a position, don't take a huge loss. Get out quickly. If you take a position on a particular stock, and if it turns against you right out the gate, you're anticipating you're going to buy and it's going to move up, and all of a sudden you buy and it's moving down, then don't hesitate. Just get out because it was not a good decision. Obviously, it can find support and then continue in the direction and find resistance and continue in the direction that you were trading. But you just don't want to risk your capital if you're trading with a small account, because we're trading 20% of our account on each trade. That's a lot. So we can't risk losing that entire investment, because in that case, then we've lost 20% right off the top of the day. And that's just too much. So looking at SPY, this is what I see. I'm sorry, looking at the VIX. This is what I see on VIX. And let's go look at a monthly chart. I haven't even, the VIX has climbed so far in the last week. I haven't even charted the support and resistance at this level, which I should do now, which I will do now. So let's go and look at the maximum. All right, so we're looking at 33.40. Let's see if we can get close to that here. Existing candles. 33.40. And don't really see anything here. So I'm going to zoom out and take some other time frames in consideration. Again, 33.40. Ideally, I'd like to use the peaks. So I'm going to mark this just because we're not there yet, but this price level here, you've got this candle and these candles, this candle, that's pretty strong resistance. I want to find something below that if I can. It looks like, all right, so it looks like I have this area. So this candle, this candle, this candle, and this candle at 33.40. Huh. Actually, it's not 33.40. That's at 37.68. And this is at 33.84. All right, so looking at 33.84, just gonna zoom in a little bit. So it hit that level, looks like last week. So let's try and find something below that and see if we can correlate a couple of these wicks. So I do see two here that I can mark. Ideally, I'd like to find more than two, but I'm going to mark this one and this is fairly close. So we've got those two. So now going to a weekly chart, I'm sorry, a daily chart. Well, let's go with the weekly because what I see here on the weekly, I see this ATR trailing stop. So I'm going to mark this ATR trailing stop at 35.37. Weekly. Get rid of these. And we're going to go to a daily. So what I said on Friday, I think it was Friday, when I drew this triangle, was that if in fact the VIX was able to break out of this, that would be a bad signal for people who are trading to the upside. And it did, because we had correlated, again, this move here and this move here and came up with this triangle. And at the time, the VIX was sort of trading just above this algorithmic support level, and it was up and down. It was a spinning top, actually, and it looked like it could decline, so it could have fallen through, and then it broke out to the upside. And as a result of that, the market just broke down. So it hit this level that we just drew here. And it's interesting because when I correlated those two candles, I didn't take into consideration this candle at all because we were using the monthly. This is a daily candle, but as you can see, it hit that area of resistance right on point, and it hit it again, and it has failed. So if we look at a 4-hour chart on the VIX, which of course we will use before market open, we see that this is going to be a key level of resistance. And we have this ATR trailing stop up here on the weekly. So we do have a lot of resistance here, but it appears as though the VIX is going to be continuing its move to the upside. At least that's what I'm seeing, given the fact that it broke out of this triangle to the upside here. It should find support on the 5-day EMA and continue to move up. We'll have a better view or a better look about what that looks like come Monday morning. But we do see that this resistance here is coming into play. And this is going to either be resistance or it's going to be support. This is a 30-minute chart. We've got 5-day EMA here for support on the VIX. And if this continues to move up, we'll have some indication on Monday morning whether or not this is going to be support or resistance, how this 5-day EMA gets handled. And if it's above this resistance level, and we may have to look for the next level of resistance, which is up here at 37.68. And as you can see, that's pretty high. It also looks like we have a W here. So I'm just going to draw this here. So this looks like a big W, which says trouble. Make this a little thicker so that it's easier to see. So if this is indeed what's happening, then the VIX is going to break out to the upside. And if it does, then the market is not going to melt down. The market's going to crash down, because that's going to be really high at 35, thereabouts. All right, so we have this big W and this triangle, which then signals a strong move to the upside. So I'm going to read to you what the Encyclopedia of Candlestick Charts says about the big W. So there's a combination of a descending triangle, and this is not a descending, but the big W and morning doji star set up a profitable trade. So what we're going to want to see here is we're going to want to see we've got a doji here. This is called the morning doji, and now we have this break. So if the VIX gaps open to the upside on Monday, and we're talking just above the high. So if the VIX opens above, if it opens for the day above this 33.84 and climbs, then I'm expecting it to break this 37.68 easily, and just to continue and to make a new high. So the 52-week high for the VIX right now is, well, I guess it's 38.94. But the VIX, again, if it opens above 33.84 and climbs, then it's going to make, in my prognosis, using my prognosis, a new high above this 38.94. So the VIX is likely to hit 40 this coming week. And if that happens, then this target for the SPY is reasonable and could actually be a nice profitable trade if you're buying the May 13 puts, which are cheap. We're talking about $1 and change for the 375. But based on that VIX behavior, if that happens, those will pay out quite nicely. So we'll keep an eye on this. I'm going to make a note on my chart basically, if VIX opens above, say 3384 and climbs, then 40 is in play to the upside. Market down. I'm going to say significantly. All right, so this is, again, past performance is no guarantee of future results. However, based on this chart pattern, this big W, and this Morningstar Doji, this breakout here, I'm looking at the VIX really making a strong move to the upside, and I'm going to be trading to the downside. Doesn't really matter what it is. So I have a downside bias. But if this does not happen, the VIX could continue to go sideways here. We would expect that it's going to break one way or the other. So it still could break to the upside. It just may not happen tomorrow, or it could break to the downside. So I think this is really an interesting pattern, chart pattern that we're looking at. And I'm going to take this off the chart. And I'm very curious to see what happens here. And let's see if I can read what it says.
What page is that, Richard?
This is on page 10 of the Encyclopedia of Candlestick Charts.
Okay, thank you.
And let's see here. Did I give you the right page? 1 second, let me just double check. Make sure I give you the right page. Actually, that is not the correct page.
Yeah, that's talking about breakouts. Gaps don't work well, yeah, findings.
Yeah, it's actually page 2 in the introduction. Yeah, page 2 in the introduction. You'll see the chart, and it shows the big W with the Morningstar, morning doji star, and it talks about in figure 1-1, the combination of a descending triangle, big W, and morning doji star set up a profitable trade. And basically what the author is saying is that this is a very rare pattern. Very rare. So, yeah, this is going to be an interesting trading week. So I'm going to be looking at, again, starting with a monthly chart, identifying opportunities up or down, and mostly it's going to be down because that's what's being shown. Now I'm going to go back to my watch list. I've scrolled through and I'm trying to find things I could trade to the upside. And so far, I'm not getting any good looks there. So let's just go again here. This is NVIDIA. And I'm looking at NVIDIA, and this is a huge long candle. But again, NVIDIA doesn't really have any real support until we get down here. This is where the buyers are. And you can see it. I mean, this is where it went sideways. So this is a consolidation. And if you look here, I mean, these are people who bought after this consolidation. So they will be selling out of their position to make sure they protect themselves. And if it falls back to this price, if they didn't sell out, if they did, then they're going to look to buy back in. But this is at the 50-day EMA on the monthly, thereabouts. And if we go to a weekly chart, This is where the 200-day moving average is. And if you look at the chart, you see the 5 days coming down across the 50. I'm going to get rid of this trend line because it's not relevant anymore. So this clearly looks like it's bearish. And again, head and shoulders, shoulder, head, shoulder. It's fallen through what would be the neckline. And if we go to a daily chart, it's not so unusual or unreasonable to expect that NVIDIA is going to continue declining at least to 162 and likely down into this demand zone. But it's getting rejected here off of the 5-day EMA. You see it's tried to get above it. It's failed, it failed, it failed, fell here, and it tried to climb above it the other day, did briefly, and then it got rejected. It failed. So NVIDIA is, again, one of those that's bearish. So does this make sense, Princess, in terms of how you would identify opportunities?
Yes, it does.
Because you want to trade. Go ahead, I'm sorry.
No, I was just going to say it's coming together nicely, because that was my question. Like, how do you put the different time frames together with what you're seeing to come up with a plan that you can trade, stick with or even deviate from because it's not working? So yes, thank you.
Yeah, and you want to trade with the trend. So again, this looks like an easy trade to the downside, given this candle. I mean, the fact that it's fallen below support, fallen through support. But if the market is trading to the upside, even though this clearly gives us the indication to trade it to the downside, this is not necessarily the stock that you want to trade. You want to find things that can be traded to the upside. Now, they are more difficult to find, no question about that, but there are some that are out there. Rather than NVIDIA, maybe NXP Semiconductor. So the semiconductor space we know is relatively weak. NVIDIA, a lot of people have been trading that. And as you can see, it has, I mean, this was a huge, if you were in a put on NVIDIA, here, it fell from a high of 275 to a low of 182 for the month of March. So that's a huge drop. And all you would have needed to do is to buy something 30 days out in terms of a put option. But NXP Semiconductor, which is in the same space, looks like this is a good opportunity because you've got the 5-day about to cross to 20, and it looks like it's going to fall from 173 to 133. It could pause here to 149, but it is clearly moving down. If you go to the weekly, again, you see it trying to hold on here, but this 5-day is a bit too much. There's support here at the 200-day EMA, but if you look back here, we're looking for where buyers might step in. So maybe here, there's a little consolidation. So if we drew this, we could say, okay, maybe buyers will come in right here. But still, that's a nice trade down to about 158 from 170 on a stock that moves on average $17 a week. That's, let's see, what would be 170 minus 17? 170 minus $17 is 153. So 153 is what a 200-day EMA is. So if it makes a full move, then it's going to find support possibly here at the 200-day EMA. Then the question becomes, does it hold or not? So these indicators, I'm able to share them with you, or if you already have them set up, then that's good. I also use the RSI on occasions. Let's look at the RSI indicator. And there are a bunch of different ones, so it just depends on which one you want to use. But let's just look at the RSI. So this is just a plain RSI, nothing fancy. And try to make this. So what you have here at the RSI is this is the overbought, and this is the oversold. So overbought is here, oversold is here. So clearly it's showing that NXPI is overbought here on the monthly. If we go to the weekly, it's essentially saying that it is not quite oversold yet, because it would fall below this 30 and turn red. And if we go to the daily, it has more room to fall as well. So you can use the RSI to look for things that are overbought and oversold. So if we just scroll through, this is Alcoa. Looks like Alcoa was in the oversold area based on this blue here back on the 25th. And as you see, buyers came in. And just scrolling through here just quickly on the daily chart. So AbbVie was oversold here. And it was just a matter of time before it corrected. And here, looks like it's quickly falling into, I'm sorry, it's overbought, not oversold, overbought, quickly falling into the oversold area. So these are lagging indicators, but they can be helpful. If you are looking to trade in a particular direction, you may want to find things that are currently overbought or oversold. So looking at Amazon, this says that Amazon is oversold. Now, don't really know, haven't really looked at Amazon from a trading perspective, and it could very well be here. Looking at this consolidation, we knew that Amazon, or we expected that Amazon was going to break out one direction or the other. So if I just took this and just highlighted this area here, I mean, you can see this consolidation. What's interesting is you've got this shooting star, which says reversal. It didn't happen right away, but it did happen. So it doesn't mean that the next candle is going to be to the downside. It just means that a reversal is coming and to look out for it. So this consolidation and this candle says that Amazon is going to break out to the downside out of this consolidation, and it did. So looking at the fact that on the daily it was oversold, it doesn't show that on the monthly. There is support here on the monthly at 23.14. Looking at the weekly is quickly moving into the oversold area. So this could very well mean past performance is no guarantee of future results, that at 23.3466, I'm just going to mark this. One day I'm going to learn how to use these tools. 23.3466. 23.3466. ATR trailing stop monthly. This could be where Amazon finds support. There is a mini consolidation here. Let's look on a weekly chart and see what we can find. All right, so looking at the weekly, if I was to try to find a mini consolidation on Amazon, I would draw it right here. Because what you see is Amazon makes this move up, then it sort of goes sideways a little bit, and then it makes this move up. So this mini consolidation says to me that there are buyers that are going to be waiting down here for Amazon. And I like the fact that the HR trailing stop for the monthly is right in the center of this, because if I'm drawing a demand zone, I typically draw a line right in the middle. And I couldn't have done that better myself. So now this could be where buyers come in on Amazon and start to take it back to the upside. And if we go to a 1-year chart, I'm going to get rid of this. It is already in the oversold or moving into the oversold area. We see the blue line here, which indicates oversold. It's likely to decline a little more. And when it falls down to 2334, thereabouts, look for a breakout to the upside. So we're looking for, on a daily here, a green candle and volume, and then that would signal a move back to the upside. So we didn't mark Amazon down here in terms of algorithmic support and resistance. So let's see if we can do that. We may not be able to. So, all right, so if we take the bottom of this candle, I'm gonna get rid of this for a moment. I'm just gonna move it out of the way. If we take the bottom of this candle here, this is the end of the month. So we can use this one. So this is a key level of support for Amazon. Let's see what we can find beneath. And then the next level of support is going to be here, this candle and this one. So now let's put this back where it was on the weekly. Let's go to a weekly chart so we can see, actually. I'm going to put this back here. All right, so now this all makes sense. If you look at this chart, let's go to a daily chart. We just drew this here, this algorithmic support level. This is the top of what we had previously drawn as a demand zone, saying that when Amazon fell back to this price, buyers were likely to step in. So what we could see is Amazon could fall here, and we could see some buyers come in. It could continue to decline, but once Amazon falls into this area, and once it breaks above this 2261, then I would expect to see strong volume, strong buying volume to the upside. And I would probably set an alert just to kind of keep an eye on what's happening here. So let's take a look at a faster time frame. 2422, it fell to 2432. So I'm expecting it's going to hit this 5-day EMA and continue to move down. But at some point, and if you look at it on the 4-hour chart, Amazon is oversold. So, all right, so we've gone an hour and a half, much longer than scheduled, but I thought it was a good session. So any closing questions or comments before we end our session today?